Hi folks, Scott here, and this is the wrap for Tuesday, August 27th. I've got a webinar this afternoon, so I'm going to go sort of fast. Markets are still live. It's about 3:30 Eastern Time, and it's been a tough day at the office. Pretty frustrating, which I'll get to in a moment. In some regards, other regards, it's been a good one. I avoided a losing gap fade, which is the most important decision for me every day because that's where I bet the bulk of my liquid capital. But before I get to that, let's talk about what tomorrow may bring us. This is today's 5-minute action. The blue line is where we closed yesterday, and you can see that today's unfilled gap is very large, unusually large. In fact, it's about 10 points. I think it's exactly 10 points, from 44 and a quarter to 44 to 54 roughly. So what I thought it would be interesting is to show you the results of fading gaps after an unfilled down gap that I would define as large, meaning it was at least half of the daily ATR, the 5-day ATR in size. So going into today, it was 14 points. So we missed filling by more than half of that, more than 7 points. So this would be considered a large unfilled down gap. And one other filter, it's went above the 200-day moving average. So there you go. It's happened about 30 times. Slight bias for gapping up. This over the past 10 years. Slight bias for gapping up on the subsequent day, and using an end of the day stop has been shown slightly attractive probabilities actually, and has made a little bit of money. A down gap is really what looks even more attractive. The sample size is small. Anything can and will happen, so never bet the farm. But it looks like there's maybe a slight long bias, but really what this tells me is, if you want to back into it, is that at 11 plus 13, 24 of the 30 gaps, 80% of them fill their gaps by the end of the day, and that's above average, unusually high. That means we're probably in for a consolidation day, or at least a consolidation morning, filling the gap before maybe it makes another move. But normally it'll take a day or two to catch a breather before it then makes its next move. So might want to keep that in mind going into tomorrow. All right, one last reminder, tomorrow is the oil gap study discount offers. We have our live event. It will be recorded. If you can't make it, you can have it sent to you, but you must sign up by tomorrow. I'm not sure if it's by the event at 4:30 or by close of business, but I know by Thursday it'll be too late for sure. So go ahead and sign up. That is a paid event. Should be exceptional. Will be exceptional. We've got great research. All right, let's see. Let's look at what the worksheet showed going into today, because this was really all I needed to know and all you needed to know going into this morning's open. We posted this last night, and it showed that if we gap down below yesterday's lows, there's a less than 50% chance of filling today, and a 0.7 profit factor. Has been a big money loser. It's lost about 30% more than it's made, and this is an average. This worksheet's real simple conceptually, but very powerful. It averages the 8 individual gap guides we have for the 8 indices that we track, the 4 U.S. futures and their corresponding ETFs, NASDAQ, Dow, S&P, and Russell. And this information is averaging not just the weighted average, but the 3 systems that comprise each individual gap guide. So really you got 24 systems, 3 systems across 8 markets, and there's just no way I'm going to trade it. Top it all off, it was a large gap. Large gaps almost always show much lower win rates, or always show lower win rates, and often show lower profitability, though not always. So you know unique day factors, know unique patterns. Here's how I summed it up today. There was a couple other information or data points that I shared. Let's see, last night's video, down gaps after a 50-day moving average straddle. Looked attractive, small sample size, and it was greatly outweighed in importance by those guides I just showed you, and just in general, large down gaps under similar market conditions historically, which have been problematic. Today was actually an extreme one, more than 1 times the 5-day ATR in size, because it opened below 1640. It's only 3 of 13 winners historically. So you got to be thinking short in these scenarios, while being open-minded though to trades in both directions, because you just never know on these real big ones. And that's basically what I said here. They're very often unpredictable. Gap fill can't be ruled out, but the guys clearly show fitting the open has been very unprofitable historically. So I'll stand aside and wait for the range guide. So that was the best decision of the day. I'd avoided a losing gap trade. 15-minute range guides came out. They don't consider the size of the gap. They do consider the size of the range. They consider the zone, the gap zone. They consider whether or not the gap is filled. So on such a large gap, I'm never going to trade aggressively, but not could not be completely unexpected to see a partial gap fill today, and that's what we start off having. And then the 15-minute range guys looked pretty good and favored the high breakout. I was not thrilled about it, but the data, I think it was 7 of the 8 indices gap guides favored the high breakout, which favored another 4 points, which would put it around half gap fill. I thought it was worthy of a half size trade, so I went long half size trade, and it went more than half the way to the target. Because I went long at 42, went 2 1/4 points, missed my proximity rule by 3 ticks, which was at 45, which will allow me to tighten my stop to entry, and or at least tighten it somewhere, at least halfway. So got rolled over, stopped out. The low breakout looked good. I traded that with half size because often you'll get dojis on these big down days. Went short at 16.37 even, and got stopped. Kid you not, at 16.41 1/4. Let's see the high of the move, 41.75. It went to 42, so it got me by a couple of ticks. The worst part was I wasn't watching the action when this happened, so I actually thought when I came back from lunch that I had the makings of a winner as we started to break down, only to find out sadly when I went to check to see how much money I'd made, just confirming because it should have been at 4 points. Target was 33, so I had been stopped out, and that sucked. So, not shocker on the long trade. I was very down on that trade in the trading room. I could not have been more down on the trade, as some people pointed out to me, but my gut told me this was a really risky trade because I wasn't fading the gap. Remember, I always consider that information, but these big gaps, again, I'll often make a sizable move, and I thought we had a decent chance of getting to 45. Just missed it. So back-to-back half-size trades, stopped out. Very frustrating. And then right now it looks like I'm going to miss one of my favorite discretionary trades. It's indirectly a probability trade, but it's basically getting short on an unfilled down gap into the close. I don't normally do it until after 3:30 Eastern time, and unfortunately you can see the move has started happening early today. I know some folks in our trading room are short right now. I am not. And my best hope now is that we put another leg up. We still got plenty of time. It's only 3:30, 3:35 Eastern time. There's a chance for we can pop higher and put one more move down into the close. So that's what I'm hoping for. If so, I'll be looking to get short on a trend line break. Maybe around the same area it broke down before, but we'll have to see. Right now it's just melting down as there is a rush to the exits, which is often what happens on these unfilled down gaps. So tough day at the office. Not over yet, but not looking good for the home team, as they say. But tomorrow's another day, and here's one great tip for you. I spoke at length, ad nauseum, about how tough these large gap days are to trade. Too many people look at the large move, and they know we're going to have some good swings both ways often, and they try too hard to make money today. Today's the hard day to make money on. The easier day is often the subsequent day after the big move is in, because it becomes more predictable than predicting which way a large gap is going to move, because the pressures are just so strong in both directions often. So just keep that in mind. I talked at length about it, about the importance of preserving emotional and financial confidence, not pressing your bets today. So it's got to be a good setup for the gotcha for me to risk going for another trade that could turn into a loss. So I'll probably keep my capital dry and see what tomorrow brings us. By the way, we're testing confluence at 1626, so expect a bounce right here in this area. We'll see. In fact, before I wrap it up, I'll show you why I'm expecting it. Go to our price guides, very cool tools. Weekly S2 is 1626.50, monthly S1 1623 1/4. Probably get a bounce here, and then maybe we roll over and finish. I mean, I could certainly imagine 23 or even 1620 today with the how heavy the selling is right now. So we'll see. But there you go. That was my day, and that is the wrap for Tuesday, August 27th. Have a good one.